Well, we're in March now, and the market is continuing to roll where we're starting to see changes here and there, which is indicating what it's going to do for the rest of the year. So, we're going to talk about the March update for Phoenix here, and we're going to talk through inventory. We're going to talk through interest rates. We're going to talk through the supply demand curve. We're going to talk through all those different things today. What's up, everybody? Welcome back to Real Talk Real Estate. I'm your host, Mark Cann, local realtor here in the Phoenix area with my home group real estate and owner of the Benchmark Real Estate team. As always, guys, this is a podcast format, just here to be real with you, here to be transparent with you, here to give you accurate information so that way you can make the best decision possible. So today we're going over our March monthly update and what's changing. Again, we saw it last month. We had a dip down interest rates wise to 5.99. So everybody kind of gets excited. Oh my goodness. So we're going to talk through that here in a second. But where do we always start is inventory, right? So we're sitting just over 25,000. We've been hovering around 25,000 for a while now. And that's not a bad thing. It's just showing that the market's healthy with the inventory we have. And this is about a normal amount of inventory that we would have in a normal market. Demand is just not there yet. And it is starting to pick up, and we'll go over those numbers here in a second. But let's talk through interest rates. As you can see here on the chart, interest rates came down to 5.99. Then this morning, I'm recording this on Monday. This is being released on Wednesday. It was at 5.99, went up to 6.12. And we're going to keep seeing that, but it's going to continue to trend down. And that's a good sign. I think we're probably going to continue to see that. Inflation, I think, came in at like 2.4%. So it's still going down. That's a good thing. So we're going to probably see interest rates, which follow the 10-year treasury, continue to go down. So we're probably going to be in the high fives here soon. And that's my hope, is that will help for a lot of home buyers. We'll have to see what happens coming up to May. Obviously, that's when the Fed chair gets replaced. So we'll see what kind of happens between now and then. But my hope is we'll be in the high fives over the next month. By the time I do another video in April that, hey, we're sitting in the high fives, 5.9, something like that. So it's going to be slowly coming down is what we're going to see this year. Now, when that happens, we're going to see demand start to rise slowly but surely. Now, it's not showing it right now. I'm going to pull up some stuff so that you can see. I'm going to show you the Cromford report data. And then I'm going to show you some other stuff too, about from Armless itself, where it's going to show different stats about different cities. I'm going to show you some different info. So let's talk through the Cromford report. Obviously, guys, the number, you see their index number, 90 to 110 is a balanced market, above 110 is a seller's market, below 90 is a buyer's market. Now, I'm a firm believer that that numbers don't always tell you everything. And I think a lot of markets are either buyers or balanced, and there might be some facets of sellers here and there. And really when I say that stuff is what I'm seeing in the market, and what I know other realtors have been seeing in the market, is homes that are like immaculate and they're priced well, they go really fast. They're gone within 2 weeks. And that's where it's like, whoa. But then you have people who are way overpricing their homes and chasing the market. Then you have people who have not updated homes, trying to get top dollar for it, and it's just not going well. And so that's where you see kind of a lot of those different dynamics playing in the market. So when you look at this, when you look at this chart here, obviously Chandler and Gilbert, Fountain Hills are all up there. Then at the bottom, you got more of the outskirts, right? Buckeye, Maricopa, Queen Creek, Surprise. And we see a lot of red on here where the market had been ticking up, and then it started coming back down a little bit. And it's going back and forth is what we're seeing, because these numbers change every week. And so I don't do a video on this every week. Maybe I should. But there is a secondary one I'll bring up, shows some of the secondary cities like El Mirage is surprisingly doing really well. And then we have Apache Junction, Anthem, Levine doing fairly well. And then you have all these other ones that, you can see they're farther out. They start going down. Sin City West, Sun City, 55 and older communities have been going down some. So just wanted to show you that information, because to me, we're seeing it kind of all over the place. Like I've been showing homes with people, and homes that, again, are immaculate, that are just well done, they're well priced, they're gone within 2 weeks. And that's where, you do see people kind of getting frantic, because that's the homes everybody wants. And I get it. It is the homes everybody wants. They don't want to have to do work to them. So if you are one of those that you're like, hey, I'm looking to buy, but I'm willing to do work, you can get those type of homes. Now let me show you some of the data I'm going to pull up here, just to show you kind of some of the different markets. So as you can see here, Peoria, this is supply and demand index. So you're going to see the first one here is Peoria, and you're going to see the supply and the demand. So we saw the supply was high. Demand has come up. It was near like 20%. Now we're up near 40%. So what does that do for the index? It shows we're in a heavy buyer's market. Okay. So then we're going to look at like Paradise Valley. All right. Different area. What does it show? Demand's a little higher than normal. Or not demand, sorry. Supply's a little higher than normal. Demand's a little lower than normal, but it puts it in a balanced market. Okay. And their stuff's just chugging along. And then I'll show you Surprise. So Surprise, here's the interesting one with Surprise. Heavy supply. But more than normal demand. Higher demand, but it's still a buyer's market. So interesting facts that it's kind of like, oh, interesting. Every city's different. And there's different subsections of cities. There's just so many different things when it comes to these areas. And that's why I don't put everything in a bubble. That's why it's important to have a local expert, because someone that can sift through that with you. But I would tell you, if you're looking for move-in ready homes that are just fully renovated, have a new roof, new AC, those things go fast. They do. So if you're thinking about buying, you're thinking about selling, I'd love to have coffee with you. Take you out, just talk to you about what your goals are, what you're trying to do, what's best for you. That's what I'm concerned with. Real estate through relationships is what I go by. So I'm trying to work through that. My information's right here. I hope you'll reach out. Guys, you've been listening to Real Talk Real Estate. I'll catch you next time.